But the 7-day streak is broken and markets have found themselves in consolidation mode. As always, volatility always lurks around the corner. We caught up with Dhiraj Relli from HDFC Securities on their market outlook for 2019 as well as the expectations on the Nifty touching 12,000 mark. So while we take that break, listen in.
We've seen steady outflows from the FIs in the last many months. I'm sure that this trend should reverse because the valuations are now more attractive as compared to they were earlier. The macro situation is looking favorable. I think the crude correction in the crude prices is a very, very positive for India, and it will have its own impact. I think the depreciation of rupee is also to a large extent is done. It should hover around 70 to 73 kind of a range. That's something very, very positive. Finance Minister is quite confident that they will maintain the fiscal deficit, and to that extent I think there is a favorable environment, and FI should start looking at the Indian markets. The steady inflows from mutual funds, life insurance companies and through EPFO investment should also support the market.
So bond yields have seen a sharp fall. What's the sort of trajectory that you foresee for FY19?
Yeah, so bond yields from north of 8% to now 7.3% level. We have seen that it has corrected significantly. This would make the cost of borrowing good for the NBFCs and even for banks, and to that extent it would have its own impact on the lending rates also, particularly in the retail lending space, auto loans, personal loans. We'll see some moderation in the interest rates even in the home loans to times to come. We believe that with crude prices correcting significantly, fiscal deficit to be maintained more or less at the targeted level, and rupee hovering around 70 to 73 levels, this is a good yield to be at, and plus minus 10 basis point is the only play for next 3 to 6 months time. We are seeing the range of 7.2% to 7.4% kind of a range for 10-year yield. If all goes well, we may expect even a 25 basis rate cut from the Reserve Bank of India also, maybe in Feb, maybe in April.
Sure, sir. So currently we are very much comfortable at 10,960 levels, but going ahead in 2019, do you see us reaching the 12,000 mark anytime soon?
So our target for calendar year 2019, by the end of 2019, is 12,400. We believe that the earning growth will be around 18% or so at the Nifty constituents level. So to that extent, our target is 12,400 for December. But if we get a favorable outcome in elections, and if we have a steady monsoon, I think no one is talking about monsoon yet. We don't know. That's one variable which is unknown. But if we have a good monsoon and good election outcome and crude remaining at 60 to 70 range, we may see the 12,000 Nifty levels much earlier than our target dates.
So recently, SEBI chairman said that we have a slew of IPOs in the pipeline, like around 60,000 crore is what they're expecting. But, how is the overall current market looking like for the IPOs, and going ahead for 2019, how is it looking?
I think the IPOs is a matter of more price discovery. Whenever promoters and investment banker feels the environment is more congenial for them to get the prices they are looking at, there'll be more IPOs. I see that more IPOs will come in the second half of the calendar year 2019. I think SEBI chief was right in terms of soft direction to the investment bankers and promoters to not get greedy and be reasonable in terms of price discovery. I think that's a step in right direction, because we want more and more retail investors and HNIs to participate in the primary market.
As far as NBFCs are concerned, do you think now the focus is moving more towards the private banks, according to you?
I would say that it's moving from NBFCs to private sector banks. Private sector banks are in any case gaining market share at the cost of PSUs. In fact, the PSUs were more lending to the NBFCs because they were not allowed to lend interim period, or they were finding underwriting difficult for the time being because they were grappling with their NPA issues. So to that extent, I don't think so. It's moving from the NBFC to private sector. Private sector they are on trajectory to gain market share, and I think they will continue to gain the market share. Having said that, there are segments where NBFCs are also doing their bit, and they are carving their own niche. They are leveraging technology. They are reaching out the markets which are not serviced by banks, and the segments which are not serviced by the banks. They have been more innovative. They have been leveraging technology also. To that extent, I think it's good. They are expanding the market.